Well, good afternoon, everyone. It's 3:30 here in the UK on Wednesday, the 21st of June, the longest day in the year. It's all downhill from here. As you can see, the short-term trend on VectorVest USA has turned down. Markets have been coming back for the last couple of days, and certainly if we stay like this until closing time, the short-term trend of the VectorVest Composite US will be down. Underlying trend is still up, and we have a confirmed up in place. But what is quite dramatic is the buy-sell ratio, which had found some fairly decent footing after a long period of being negative 3 or 4 days ago at 1.57, and now it's back under 1 again. So more companies on the sell rather than a buy. The VectorVest advice is not to buy stocks at this time. Okay, so markets pulling back. I think that pretty much everybody would agree that the run-up has been quite strong, and that even under the most bullish circumstances, a pullback is warranted. So the S&P 500 that I follow very closely is down 20 points on the day. We'll have a look at that in a moment. There's the VectorVest Composite, which is an equally weighted index of all of the shares that we follow on the London market. I've added a 21-day moving average, which is really not necessary. These are the signals, the longest term signals called confirmed calls over the last year. And you can see that since the 8th of June, we've been in a confirmed call up. The confirmed calls in a really miserable market, the confirmed calls have done a really good job in keeping us on the right side of the market and avoiding all this SWB angst, etc. So over the last 3 or 4 days, as you can see, we've pulled back. We're at a very important support level here, this gap. And markets are doing their best to fill that wee bit of a gap today. But I think that even under the most positive circumstances, we're probably due for a pullback down to here. So I think that I'm certainly mostly invested in the UK at the moment, but I'm not going to do anything more. I'm 60% invested. I'm very happy with the stocks that I've got, apart from one. There's always one. But I'm not going to do anything more until this market pulls back, finds its feet, and starts to move back up again. The front page of VectorVest will tell me exactly when that has occurred. So let me now have a look at the S&P. I have it running here, and my position not that good today. I'm short from there, and my stop loss is just there, so it's not doing anything for me today at all. I was short yesterday, took 20 points out of it yesterday. That's all I did. But I've had a very good day in gold, and those of you that follow my work will know that I've been bearish on gold for the last couple of weeks, well, the last couple of months, in fact, after the run-up. And last week, I was short of gold just here underneath those lows, and the Fibonacci expansions found a target just there, and that's where I had my target. I love the Fibonacci. Those of you that know me will attest to that. And got out at slightly under 96, put it a couple of dollars above the level. I got on out at 96.28 or something like that. That's a really, really good trade. But I couldn't resist this one yesterday. And this is what, it's not a great example, but it's what would be referred to as a Wyckoff up thrust. You can see this support level, and the market breaks support, goes up and tests it a couple of times, and then goes up and takes it out and reverses. And I'm short from there, was short from there at 1949. And the target was reasonably obvious. We had 3 legs down, and again the Fibonacci expansion of that last wave had a target of 1924, and I'm out from 1922. Okay, so that was just got out of the market. So that was a very, very nice trade. That was about 4-to-1 risk to reward trade. So reasonably happy with that. If we look at the daily chart of gold, we can see that it would seem to have broken out of this little triangle, which Elliott people would call a B wave, like so. Seems to have broken out of that. And I think that we're going a little bit lower here. I know that some of the gold bulls will be sticking pins into me, but I think we're going not that much lower, but we're going down into a very, very good buying point for gold. This is an impulsive wave. This looks like a corrective wave to me, but it's still got a bit to go, and it's fighting its way down. Clearly, Mr. Powell was speaking in Washington today, and whatever he said caused the gold market, we go back to the early chart, caused the gold market to fall very, very aggressively somewhere here. I don't know whether that was him or what he said, but nevertheless, the market fell quite aggressively. I trade the patterns. I leave the waffle to somebody else. Okay, that's gold. So if we have a look now at VectorVest, and we just go to the views tablet, this is the top stocks by VST, and my word, it's had such a great run. I haven't taken advantage of it, although I'm very, very happy with my trade in the QQQs, which was leveraged 5-to-1 with the UK spread beta that I use, and that was a very profitable trade. So super micro SMCI would have been better, but I'm more than happy with the trade in the QQQs. Got out maybe a little bit early, but nevertheless got out. Let's look at this chart, and if we look at this chart, we can see that it's an outstanding example of what I teach in some of the courses. It's called a rocket launcher, and that's a gap through an obvious area of resistance on big volume. And that's just a great example of the rocket launcher. Markets have come back to the 21 period moving average. Those of you that are familiar with Linda Bradford Reschke, she wrote a book years ago with Larry Connors called Street Smarts. And one of her strategies was a pullback to the 20 or 21 exponentially smooth moving average, which she called in the book the Holy Grail. And I think it was combined with an ADX of greater than 20 or 30, although I don't have any great place for the ADX in my own work. I spent years trying to get that thing to make some sense, but unfortunately it is lagging like everything else. So I gave that up. This gap right through that resistance, that's the rocket launcher. And when you trade the rocket launcher, you simply buy in at the next open, and the stop loss is underneath the low of the bar prior to the breakout bar. Now, you can live alone on rocket launchers. It's got a very high hit rate. I like to see earnings per share rising at the same time. So you need to try and put the VectorVest fundamental metrics at your back. So, but a gap through an obvious area, and I say obvious area of resistance. If you can't see it at a glance, it's not there. So that was quite obvious to me. And that breakout should be on large volume as it was here. It's the biggest volume on the chart for the last, God knows how many months. And then it normally sits and goes sideways and moves right back up. So it's found support at the 21E moving average. And as you can see, there are a very important level here, and certainly many traders could take a a trade here with a tiny risk to see if it's going to go again. I think the only thing that mitigates against that is that on these 2 bars down, volume rose, and we should, for the best trades, as the market pulls back, volume should dry up completely. See, in this little bit here, as it was going sideways, volume dried up. As it was going sideways, volume dried up before it moved again. So that's the only thing that puts me off this at the moment. Nevertheless, the risk is so small. I don't think you've got much to worry about. And certainly those people who've got it should hold it. Well done to you. So if we go back to the front page of VectorVest, folks, that's the UK. That doesn't help us. If we go back to the, we can see that the S&P is now down 18 points. I think I've probably been stopped out of that little short-term trade of mine. Not quite yet, but yesterday wasn't much better. You see how I got in and it sat and went sideways for 15 minutes. Today it's more than that, so I shall consider just cutting that soon if it doesn't move. Remember, there are only 4 outcomes. One is a big win, and that gold was a big win for me. 2 is a small win. 3 is a small loss. You get those all the time. And 4 is a brute of a loss. And your job, ladies and gentlemen, is to avoid big losses. If you can avoid big losses, then you're going to survive in this business and prosper in this business. The people who don't make it in the business simply, they think they know what's going to happen next. And because they think they know what's going to happen next, they have a big bet. Well, if you know what's going to happen next, why mess about with a small bet? And if you know what's going to happen next, why would you have a stop loss? And even if you've got a stop loss, why would you put it into place? So traders that have been at this for a very long time know that in any one trade, absolutely anything can happen. And your number one objective to become successful and consistent is to have no big losses. Anyway, I'm on my wee bit of a soapbox again, folks. So I think that we've probably got another few days of a pullback. Maybe this level will hold it, but I think we've got another little bit to go. And I shall certainly be doing nothing until we find a bottom. When we find a bottom and we start to move up again, that will certainly confirm that the probabilities favor that we are in a bull market. Although the central bankers of the world are in a quandary on both sides of the Atlantic. On one side, they want to stamp out inflation. And certainly here in the UK, where although America paused, certainly here in the UK, there are many commentators expecting a 0.5% increase tomorrow. And then on the other side is what that's going to do to the housing market, and is that going to in fact precipitate an early transition into some form of recession. The cynical economists out there say that a recession is the price that central bankers are prepared to pay to actually kill inflation. I'll leave that all to the economists. I'll just stick with my charts. But for the moment, we're off 16 points. And there's probably a little bit more to come. I hope that helps in some way. Thanks very much. Bye-bye.